Our guest today, the first Indian woman to graduate from Harvard Business School, a niece of industrial L.M. Thapar, but who chose to strike out on her own in banking and is today one of India's most successful bankers. Naina Lal Kidwai, Group Country Manager and Country Head of British Bank HSBC in India. Naina, thank you very much for joining us.
Thank you.
In 1999 with Morgan Stanley, you were perhaps again in the middle of some of the most exciting times. You took Maruti public, you were involved in the VSNL divestment. We are again at that kind of stage but we seem resigned to the fact that what we're going to see now is just a divestment. We're not going to see a strategic sale, we're not going to see privatization, and we're all resigned to it almost. But do you think, since you work with government closely, do you think that we may be pleasantly surprised?
You know, the easy solution right now is, of course, the capital raising end, and why not? The markets need fresh issuance. What better than government to put more equity in the market? And to the extent that the markets bring their own discipline, because they do, and the corporate governance standards that the markets bring and force are all good for engagement at the board level of government companies as well. So that's a huge positive, and I'm glad that it's moving ahead. And frankly, it's not controversial. Shouldn't be, because government gets money, and that money gets invested in the things government should be in, the NREGA programs, the rural programs, the education, and the huge agendas government has. And on the other hand, if the money is raised by the company because it needs the money, then that too adds value, because at the end of the day, the company becomes stronger, as will be the case with the banks. They need the money. And to the extent that they raise the money, value is created for government. So that's very positive. But I do think that the time has come for government to take a good hard look at some of the companies it is in. What is the business of government in, whether it's airlines, we saw in hotels that there was the exit and it's paid off.
Maruti, for instance.
Yeah, Maruti.
They sold their first stake for about X, then 2X, and when they finally gave control to Suzuki, it almost 6X that they sold that. So,
absolutely. And that debate has not happened, and it should happen.
But as an investment bank, we saw QIPs coming in. Now we've seen the first IPOs going in and coming out quite successfully. And now we're hearing noises from corporate India. Do you think that we are ripe for another spate of IPOs and public issuance?
Well, the markets have certainly opened up. In fact, HSBC was the lead arranger along with Kotak to do the Mahindra IPO. And that, dare I say, I believe really opened the market. Small deal, but it demonstrated a well-priced deal can not only raise money, but trades well. The fact that the stock actually goes up 10%, 15% is a very important indication of continued demand, that this was not a deal that was force-fed into the market. And now we've seen that there are others, larger deals that are coming through and will come through very successfulh. So I believe the party is back.
But do you need one big government deal or a big deal? But now I suppose it's only a government deal can happen to fire up the market again?
Well, I think the market's fired up. It doesn't need government or not. A strong IPO doing well. But it's a very skittish market. It's a volatile market. One deal badly done, where investors lose, can also seize the market up. So it's very important that we move into this market in a responsible way. We must leave money on the table for investors. We don't have to overdo that, but we must leave some money. And I think we will see private or public money is available and will come in.
But how important is time? Because we got the government, which we got the market looking at a 400,000 crore government borrowing program. So is it urgent that the government gets financing from somewhere else, or do you think it's okay, we can absorb all of this?
I think we have seen the volatility of markets, and things turn on a dime. We are in a nice spot at the moment where India, China are seen as attractive destinations for global equity markets. I don't know how long that stays. I like to believe it stays. Maybe other markets begin to pop up. Maybe our monsoon, and I don't believe the monsoon will change it, but just some bad news of a local nature drives that change. I'm very, very clear that when you come to the markets, you have to be opportunistic. The opportunity is there. If you need the money, you move. Because as we saw, the market's shut for a couple of years. We're lucky that it's only 2 years. It could have been longer. It's longer for many.
Yeah. But the economy, because anything could happen, but we clearly see, the green shoots seem to have blossomed a bit, at least over the last 3 or 4 months. But do you think it's there to stay, or do you think that anything could turn it back?
I think it's a very skittish market. As equity markets go, these markets, the volatility reflects it. You get the high betas, and these are all indications that confidence is returning. It hasn't returned, and it can therefore turn on a dime. So it is important to for us to work responsibly going forward, and the controls and strictures as we see them to be there. And I'm very confident SEBI, with the quality of chairman we have there, watches all this like a hawk. So that's good news. On the other hand, we have to make sure that while we do get driven by domestic demand as a country, and our economy has benefited from the rural demand and hopefully now from the infrastructure story, the fact is we still have a situation where industry is limping back to normalcy. It looks like a difficult year for agriculture, and we're not out of the woods in terms of government borrowing. So should we be making the most of this party? I think absolutely. Because the government borrowing program is high. That money can be well spent in terms of further rural growth, which we have seen benefits all, benefits the economy, therefore benefits all. And that is really what I would think we should be doing, raising much more money.
I think in an interview about in April earlier this year, you said that your economist had predicted an upturn in India by October. Has that upturn come quicker than you thought, or quicker than he thought?
I think there's, it's cautious, but it remains optimistic. The interesting thing is our economist has not revised his estimates downward based on what is looking like a difficult monsoon, and that's good. The way he argues it, and I absolutely buy into that, is that while a 2% drop in output could be a 1% drop in GDP, he has not changed his projection of 8% for the next year, which is the next calendar year, 8% GDP growth. And he stays on track for that because he believes that our dependency on the monsoon, while it's there, and it has been a weak monsoon thus far.
You're obviously not worried by the 400,000 crores government borrowing
program. He is,
program.
and the fiscal deficit is an issue.
An issue, okay.
So does the rural growth story come through when you get a poor monsoon? No. In itself, agricultural output is less of an issue because India now has large irrigation, well, in some states is 50-60% irrigated. So the dependency on the monsoon itself is less of an issue. We have a stockpile of food grains. That's not an issue. The issue is more in terms of rural demand. If the farmer does not have money from his produce, then where's that rural demand story going to be? And I think government therefore will have to look at continuing that stimulus, maybe a little longer than planned, to put money back into that rural growth story. Clearly,
policy action around the world and stimulus have found traction in the economy. But is there a concern that once governments run out of stimulus money, that they could find that the economy really hasn't caught on as yet and we could see a downslide again?
Well, that's always a risk. But I don't think it's a risk at the moment because whatever has been spent appears to be working. And industrial production has to come back up. Now, we've had a pretty pathetic last year in terms of industrial production, but that's where the green shoots are showing through. That's where capital being raised. Initially, a lot of the equity being raised is to repay debt. So it's not really going into capital formation. It's going into putting the debt equity ratios right. But as companies heave a sigh of relief that their cash coffers have gone back where they should, they're no longer scared about the debt they're holding. And that too, when interest rates may begin to move up, and so they're not therefore exposed to the interest rate volatility either. The next wave of equity and debt raising should be for growth. And, whether that growth story is abroad, where acquisitions have continued from Indian companies, maybe not at the same level, or indeed domestic demand being strong, I should hope we will see that investment in country. And the infrastructure story is still a really sad story.
And also an opportunity in a sense.
And therefore, yes, also an opportunity.
And we take a break at that point. We'll come back and talk more about you in the bank after this. Stay right there.